Hello, y'all. How are we doing? It is Tuesday night, January 28th, which is crazy. We are almost in February, y'all. We are almost in February. So thank you for coming out to the Crown by Nichelle podcast. I'm trying to put up my little banners, not the little, they're nice banners. So, welcome to the Crown by Nichelle podcast, where you can see us on all streaming platforms. Right now, we are currently live on Facebook, Instagram, and YouTube. But within 24 hours, you'll be able to listen to it on Apple Podcasts, Amazon Music, iHeartRadio, Spotify, podcast index, and watch it on YouTube within the next 24 hours. So a few things I want to brief you on before we even move on. If you want to connect with me and follow me, and I'll have that streaming. The only thing that's different on there is the TikTok. I'm not on there. I refuse to drink the Kool-Aid. So I'm not on TikTok anymore, but I am. You can find me on LinkedIn. You can find me on, again, Instagram. You can find me on Threads, Blue Sky. Check me out. I have books available. You can order books. But what I love about it right now, it is available now on Amazon and Barnes and Noble. Eventually, I have a feeling it will be available on like Walmart and Target and some other places online. I have to double check and make sure because it takes a little while to populate on the website. But Blessing for the World, which is a children's book that is a love letter to our Black boys. If you want an autographed copy, you do have to order it from me. It takes about, depending on availability, 1 to 2 weeks for you to get the book if you order it from me versus the other sites. You may get it a little bit quicker, but it will not be autographed. The next book that is on the docket is Reverse. That is where I talked to my editor last night. We still are on schedule for that to come out February 24th. So you can also pre-order that on my website. So tonight, I am going to bring in my guest. So tonight, y'all have seen his face before, and he actually did an episode where we talked about wills and trusts. And then somehow we talked about life insurance too, but it occurred to me in the midst of our discussion, it was not as in depth as it needed to be. So I said, you definitely need to come on another episode. I apologize. I did not get him in on season 1, but I brought him on season 2, and we need to do another discussion. We'll do another discussion. But basically talking about leaving a legacy. So Carlderone is that guy that if you need to learn about how to make your money work for you, he is that guy you want to definitely connect with. So I'm going to put up his social media every now and again, but I'll do that right now, where if you have any questions for him, this is where you can reach him on Facebook, on Instagram, with Wealthy CRG, and his website is crgwealthgroup.com. So if you have any questions, definitely put them in the comments. Definitely, because we're able to see your questions. I will be flipping back and forth between here and Instagram. Is there anything you want to add to that, Calderone, to that introduction?
No, not at all. I just appreciate you having me again. I'm excited about this episode here. Yeah.
All right. So when it comes to number one, it trips me out the number of people who have the nerve to admit they do not have life insurance, but yet you buy Jordans every time a new pair drops. You buy a new bag every time a new one drops. And I just wonder where our priorities are, to the point that when something happens to you, we got to do a GoFundMe or raise money for you to be buried. And let's be honest, life insurance is bigger than just covering you when you're gone, but it's not just covering you when you're gone, but it's also covering everybody else in your expenses. So what is the main reason why you believe that people need to have life insurance?
Well, the main reason, just like you stated, Liz, there's life after, a loved one's passing, right? So, for instance, there's a lady. Grandma has, grandma passes away. Somebody got insurance on her. They're able to take care of the final expenses or the end of life expenses, like the funeral costs and all of that. But what about grandma's house, or what about grandma's land? Because it still needs to be taxes paid on that land. If it's a husband or wife situation, right? There still is going to be a mortgage that needs to be paid for. There's still going to be young kids. They still need to grow up, right? So insurance is more so of like income replacement. That's what you should think about. Okay. So the people who do not have it, or they think it costs too much, it doesn't cost at all, people. I promise you. Because if you and I'm glad you brought that up with the Jordans, because that is funny to me. Um, yeah, so you can take that money and put it into an insurance policy, so that way, if something were to happen to you, right, your family will be taken care of. Because one thing's for sure, those Jordans can't pay that mortgage.
Mm-hmm.
You know what I mean? That Birkin bag, yeah, it costs whatever it costs for you to get it, but it depreciates.
Mm-hmm.
Life insurance appreciates, and it will appreciate you if you and your family would appreciate you as well if you were to have a life insurance policy in place.
And on average, and I know it varies because they do have you do some life insurance policies do require you to have a physical and take certain tests,
Mm-hmm.
make sure medication. But on
Mm-hmm.
average, if let's say I wanted to get a policy, and even though I'll admit $100,000 is not a lot,
Mm-hmm.
how much on average am I looking at paying monthly for life insurance or something like
Well,
that?
that's a great question. That's all dependent upon your age and your health. All
Mm-hmm.
right. Now, if you're, as I think I've stated this in the last episode, right? The younger you are, the healthier you are, then the more affordable it will be. You know what I mean? Compared to someone who's older and they have a lot of ailments going on, they might have to pay a little bit more. But on average, and that's the thing, I wouldn't say how much. My main focus when I help clients, I ask them, hey, what are you comfortable with putting towards an insurance policy, right? That's what I'm more so focused on. So if because I don't know everybody's situation. Everybody's situation is different, especially in today's economy. Life be life, but you can still get a life insurance policy. But
Mm-hmm.
I ask people, hey, what are you comfortable with contributing towards a life insurance policy compared to that? And they'll give me that number. Now, usually on average, it is between 50, if you want a good, decent policy, between
Mm-hmm.
$50 to $75 within that range.
And what to you is a good, decent policy? How much is that?
To be honest with you, 10x of your income.
Mm,
So if you make $80,000 a year, you need to have $800,000 in coverage.
that's good to know.
Yeah. If you make $100,000 a year, you need to have $1 million plus in coverage, right? Or what I like to do, I ask people, hey, what about your mortgage? So how much do you have on your mortgage? And this is dependent upon if it's a term policy or a whole life policy, right? So with term, I'll ask this question, hey, you know, how much is your mortgage? So they may say $350,000.
Mm-hmm.
I would then say, hey, well, you need at least $500,000 because Lord forbid something were to happen to the spouse, whoever take care of the mortgage, right? That will be covered. So now that's one less thing the other spouse, the living spouse will have to worry about, surviving spouse rather. And they got like 100K or 200K left over for other things. And then they could take that money and then they can purchase another insurance policy or take care of everything else they need to take care of. Or I like to say, hey, invest it in other, once again, in other insurance policies, start your business up, invest in the kids, get them different high yield savings accounts, things like that. You know what I mean? So if you got a mortgage, get two times your mortgage. And if depending upon your income, 10x it.
Mm,
Mm-hmm.
that's good stuff. So let's start from the basics. And I before I even get into the basics, I want to emphasize some of you like $50 a month. Think about how much you spend on certain things. And honestly, the reality is those who have it. But I'm even thinking about those of us, part of our demographic, who y'all like to go to the club every weekend and like to buy alcohol every weekend. And I remember back in the day, this is like 98, 97, when I was 98, 99, when I was working at Foot Action, it was the same dudes who came through every Friday to get a new pair of sneakers they were wearing to the club that night. And it wasn't no cheap sneakers. So you came through every week on payday to spend $100 on sneakers every week, imagine what life insurance policy you would have if you just took a portion of that 1 week that you spent on sneakers and you put that towards a policy for a month. So just think about that, or the vacations we like to take, or even some of the excursions or the concerts. How often do you need to go to a concert and you don't have a life insurance? Like, I don't understand stuff like that. So when I realized, and it's mostly us, we don't, and I say us, it's like, it's us, and then people from a very lower demographic, not demographic, but poverty standpoint, that you feel like you don't have money, but then for your daughter's first birthday party, y'all got crab legs and steak. Did we really need all that? We really didn't need all. So we really have to be conscientious of where we're spending our money. And you'll see you have $50 a month to spend. When you look at your Amazon purchases, you have $50 to spend. So let's start from the basics, from whole versus what is the difference between having a whole policy and a term, and what are the advantages and disadvantages of that?
So that's a great question, Ryan. So the difference between the two, whole life is exactly what it says, right? You have that for your whole life, meaning if you were to get a whole life policy today, that whole life policy will you have coverage up until the good Lord calls you home. Like if it's 50 years from now, 50, 60, 70 years from now, you will have that coverage. Also with a whole life policy, there's what we call a cash value, a component attached to it, right? So every time you pay your premiums, there's a certain percentage of your premium that go towards your cash value. And within the cash value, right, you're gaining interest. So it's like a little mini, I like to call it a little mini savings account, right? And you'll be able to pull out of that. So if you need a down payment on a car or a home, depending upon how much you're putting towards it, because it is what you put into is what you get out of it, but you can use it to get to fund what you need to fund, right? Now, also too with whole life, there are some living benefits, of course, attached with it. You can add your spouse as riders, your kids as riders and stuff like that. So it's a permanent policy. So think about it like that. Permanent, whole life is a permanent policy. It's going to stick with you through everything. All right. Now with term, however, term is for a certain amount of time. Usually it goes up to 30 years. So you have 10, 15, 20, 25, 30-year term periods. Okay. Now, these type of policy are more so affordable, and also you get a lot more coverage, right? You get a lot more coverage than you would if it was a whole life policy. All right. It does not have a cash value associated with it. Now, the pros is with term is that it's good, like for young people like ourselves, right? You can spend $50 and you can get $500,000 worth of coverage or $1 million worth of coverage. For me, literally, I'm paying $50 for $1 million worth of coverage per month, easy, right? I could do $50 per. That's easy. Everybody, that's why I tell people, hey, you young, get you $1 million term policy, because we don't know what's going to happen. Now, at the end of my term, I will have to I can renew it, and by the time I get 30 years older or 20 years older, I have to also understand when I do renew it, the premium will be higher and the coverage amount will go down, because like I stated earlier, life insurance is predicated on your age and your health. Now, it's different for men and women. Of course, men, their premiums tend to be a little higher. Okay. And then women's premiums are more lower than men, because I like to tell people we like to do the dumb stuff. Like we will be in our car on I-26, I-20, and we're like, you know what, I'm about to hit it. We do stuff like that. You know what I mean? So, but that is the difference between permanent and term. So whole life, perm and term.
So so let's say, because you said it is cheaper to get a term life policy. Could it be I start off with a term, and then when my term is up, I get a whole? Do I want to do that? Is that financially okay? So explain it, break it down to us.
Now I'm gonna tell you this. I'm gonna advise. This is a suggestion. You don't have to take my advice, right? But you can do that. but it wouldn't be in your best interest. Why?
Okay.
Explain it to you. You start off with the term and you wait to get the whole life. Well, like I told you with term, when you outlive that term policy, and also if your insurance policy and your premiums and your coverage amount is based on your age and your health, it's best that you get your whole life policy in place early on with the term. But start off with the term policy first, and then a year or two after that, or even 5 years, somewhere along the way. As a matter of fact, do it a year afterwards. So that way your premiums for your whole life, because that's going to be a little higher. All right. And they work with each other. All right. So when you do outlive that term policy, right, you're locked in at that low price of $25 or $30 a term. And then you got a locked in price on whole life at $75. So when this term policy actually, when you outlive the term policy, you don't have that anymore. Guess what? You're 30 years older. You're still locked in for the $75 compared to you being 30 years older, and that whole life policy is now $300.
And then with whole, just like, and tell me if this is the case, because I'm still fresh off of me working in the school system, and we will offer certain insurances. Can you increase whole or term without having to do a physical?
Now, that's a great question. That depends. Okay. And also most of the times, yes, because if you wait, say for instance, right now, you get a policy and you say, I want to increase it. Well, they might have you come in, may do a urine analysis or blood work, because that 2-year period, yes, you might have been rated at this particular, so you preferred, because they're different ratings. All right.
Okay.
You might be preferred, but they might have say, Brian, you know what we need? Yeah, we understand you want to up the ante, but we need you to come in and do some blood work, because now your health might not be the same. So they just they may check it and all that good stuff to make sure that, you're healthy enough to get that same or keep that same preferred rating at that age. Now, your premium may go up, or your premium will go up because you want more coverage. You know what I mean? But needless to say, that's why I say, hey, get a policy with this company, get a policy with that company, get a policy with this company. Do it like that. Diversify your insurance portfolio. So you won't. And if you're a person, I mean, I'm from where I'm from. I know my people. Some people can't take one of those tests. So it's best that you, get a policy here with this company, keep it on the books, get another policy over here, keep it on the books. And that's what you call stacking. It's called stacking policies. We can do that.
Okay. Yeah. We need to come back to that, what you just said about stacking. So I have a question on IG. Lola asks, is it a good idea to get a whole life when you're over 40?
That is a great question. See, I'm a broker, right? I'm not a captive agent. I'm not tied to one company. I ask people, I don't know her situation. For her situation, she may need a whole life policy, right? And that's just dependent upon her needs. So my focus is, what are your needs? What are you comfortable with putting towards an insurance policy at 40 years young? Because it's going to be this much. Now, you can do that, and it'll cover you if you're looking for stability, as far as like not having like 30 years or 40 years from now, you want something permanent. Yes. But if you're focused, you say I'm 40 years young and I'm focused more so on, I want a higher death benefit. Well, 40 years old you can get a 30-year term, right? But that gives you to age 70. Now, statistics, people pass away. I forgot the statistics, y'all, but more so between ages 70 and I think guys, the average age, I forgot what it is. I got to get that information. But you stand a chance that if you were to pass away, you're getting older. You got your family or your loved ones will have a higher, their beneficiaries, so whoever that it may be, they'll get that. So it just depends on the needs of the individual, right? Yeah, so that's what that is, Miss Lola. It just depends on your needs. So if you're looking to have a lot of coverage, and right now you're not able to afford anything, like afford that premium for a whole life, then get a term so you can have more coverage and pay less than for that 20 or 30 year term period. But if you're like, okay, cool, I want to whole life policy just in case I next 40 years I can see myself living to 80 to 82, then you get you that whole life policy. Does that make sense?
Yeah, and so basically, whole is pretty much you trying to live forever.
Right.
Or you think you're going to live forever. Mm-hmm. Term is let me get enough of this much, and if I need to add more, if I come up to that term, I add more.
Right. But okay, so term for perm is like, okay, cool. This is my foundation. I'm good. Mm-hmm. Term is like, okay, just in case I pass away too early, my family gonna cash out.
Okay.
You feel what I'm saying? So perm is like, okay, like once again, I have that foundation. If I pass away, I'm looking to live for a long time. If I were to pass away at this age, say 80 or 90 years young, my family would be good with this 100K. But if I get a 30-year policy and it's $500,000 and I'm only paying $50 for it, this is just in case I pass away within that window, that 30-year window, and then now my family they'll have a $500,000 benefit coming to them. Does that make sense?
Yeah.
It's like so right here is like, okay, I got this, but the term is more so just in case I go too early, at least my family gonna be good. Because they're gonna have a lot, and I didn't have to put much in. And also with life insurance, people don't understand, and I see this all the time. People go to the gas station and y'all put money in these the plate of numbers and never hit, right? But what if I told you, if you thought about your insurance policy like the lottery, because when the thing about it is the amount you're putting in to an insurance policy, depending upon the face amount, right? By the time you pass away, you have put way less in than your family will be getting more out, and you only put a little bit in. So what risk? And people say, well, I can't afford it, or my family, I didn't come from a rich family, but a rich family gonna come from me. But this is the way to do it. Because 30 years, think about it. Somebody is paying $50 per month, which equates to $600 per year. All right, $600 on a 30-year, say 25 years, and they got what $200,000 worth of coverage. I got my calculator right here. Give me 1 second. I used to know it off the top of my head, but so 25 years times 600, or $600 times 25 years, you only put $15,000 in to get $500,000 if something were to happen to you.
Goodness.
So all these parlays, this is the true parlay right here for your family. You're gonna hit regardless. You got your family on a parlay for sure. Your family gonna come up. But I guess because it's not tangible to that particular person, that's what makes it. Because I'm not gonna be able to enjoy it.
Yeah,
but it's not for you, your family.
So Lola brought up another question. She says her parents are 76 and 83, and they do not have life insurance. So what does she need to get, or what do they need to get? She technically could get a policy for them, right? Or how does that work?
Yeah,
how does that? We talked about that on the podcast before. If we realize family members don't have policies, what do we need to do to make sure? Because I want to say my mom has a policy on my son. So what does she need to do?
Okay. So, and I do that because this is where, oh my, I run into these type of cases every day. So your mom and your dad is of that age, right? It's going to be, I don't even want to say, but I'm going to keep it real. It's going to be costly for that age for them to get life insurance. Why? Because of their age, and no telling if they're depending upon their health issues and stuff at that particular time. Now, what you can do, if you have siblings, if they're your she said it was her parents or grandparents? Her parents. If she has siblings, right?
All of them
chip in. So it might be about $400, $500. So if it's 5 of y'all, that's just $100 a piece. If it's $300, do the math. That's $60 a piece. So y'all come together right? And get mom and dad a $20,000 or $10,000 policy because you would rather do that together right now than to have to something happens, Lord forbid something happens to mom and dad, and you got to come up with $15,000 up front. Because see, these funeral homes, they want to, oh my God, are we gonna be here for you? But at the end of the day, they in for this. They in for this. I don't care, and I'm cool with some funeral homes and stuff like that. And they looking at this right now. Don't have that smirk on your face. And I had one person tell me, yeah, man, like they look, and then also they look at your life, and this is going back to having a term and a whole life policy, right? The reason why you want to have both of them, because say for instance, the term policy is 500,000 and your whole life is 100,000, right? The funeral home is going to base their price of how much your policy is. So you show them the lesser of the two. Your family shows them lesser of the two, so that way you keep the big boy. Because they see that 500,000, they can say we gonna charge you 80,000.
But isn't it possible not to even show them what your policy is? It's like, I need a quote on this burial and all that. I feel like my mom and I talked about that. She didn't show the funeral. When my dad passed, she didn't show them her policy. She was just like, okay, this is what I want, and this is, I need to know how much it costs. She could, and then she was able to pay for it. But for people that do that I'm gonna tell you right now, that's their way of getting into your pocket. So I legally don't think you should morally show them your policy when you are burying somebody. You just tell them, this is what I'm looking for, and just get the price, because that's gimmick. Because a lot of people don't realize you can get a coffin from Costco's for $200.
Right.
So
exactly.
So don't let them gimmick you. So be careful with that. Right. So one thing that came to mind when we were talking to Lola, I want to say this also, and it doesn't have to be immediate family members. It could be anyone in that family. If we're looking out for grandma and make sure that grandma, now I know it's going to be a little bit much if you're the only sibling, but if you have multiple cousins or aunts who we don't mind, I don't know who I was watching on a podcast, but they were saying how they have these monthly meetings, but you have to come to the meeting with a certain amount of money. But that money is invested, whether somebody's trying to get a license in something, whether insurance license.
I know exactly. They invest in, I know, I forgot the guy's name, but what they do, they take the money this month, they get this person a life insurance license. Then the next month, they get his dad got a CPA, and then the next month the other brother or cousin, they're getting their real estate license. And they all come together. Now they put money in each other's pockets, and then the life insurance agent going to make sure everybody got an insurance policy.
And that's exactly what
going to make sure everybody taken care of on the home. But the thing is, Ms. Ryan, to be honest with you, your family has to be on, everybody has to be on the same page for that.
Trust me, I know.
Because let me tell you right now, if people cannot, or they complain about $50 right now, and they got kids, they're not going to want to do that. They're going to be the ones, I'm going to just wait and see. No, bring what you have, and we can just start somewhere, because you never know.
Yeah,
I know exactly what you're talking about.
So it's money. So and that's another thing that me and that's what made me want to have this second podcast. Is like I had an epiphany. We're sadly in a situation where on my mom's side of the family where we're dealing with heirs property, and people want stuff that don't belong to them. And I thought about how if we would have known economically as a family, asked my grandmother, well, how much is your policy? And if she would have said, well, it's only for 10,000, okay, then we would have added to her policy as a family to make sure not only was the house covered, but the taxes would be covered for so many years. So you wouldn't have to worry about. That's why a lot of us are losing land, is because we want to keep the house, but we don't have the money to pay the taxes. But if we had all chipped in $20, $10, and think about some of us, how big our families are. I'm thinking about my family alone.
Yeah.
My mom alone with my grandmother, it was 7, I want to say 7 of them. So all of them and then their kids put in $20 a month to cover the policy. So when she had passed, to this day, her house would have been, we wouldn't have to worry about, well, who's paying for the house, who's paying the taxes and whatnot. So it's just one of those things where you really have to have honest conversations with your family members, especially your older family members. And honestly, I think it's any family members, because sadly, if you've been on Facebook or any type of news outlet, our young people are dying. And so do you have a policy to cover and make sure, like it looked up for me where my mom has a policy for my son, because I had a policy on my son. And then when I came out the school system, I canceled it because I'm going to look for something else for him to have. Well, thank God he has that in place now until I can get myself in place and I can have something covered. So again, it's very important for as a family, as a unit, even with your friends, ask them, do you have a policy? Right. Do you have a policy? So that way it is not, again, we don't want to do one that's enough to bury. And that's where you have to start, because financially, that's a stretch, as he said earlier. I get that, but you can over time add money to it. Now, it may require you to do a physical to check on your health and whatnot, but if you can gradually push towards that and do that, then you can do that. So we mentioned earlier, but we were going to discuss business insurance. So what does that look like? How does someone apply for it? How does that work?
So business insurance is just like life insurance, right? It's just saying, hey, depending, like in the case of your death or the owner's death, like the business will get those proceeds. So it's like the business is just the beneficiary. Now, if people are in a partnership business, right, it's called a key person. You get what you call a key person insurance policy. So say, for instance, you and I, we go into business together. Well, we get a key person's insurance policy because it covers what I had, the income I brought to the business, and something happens to me. Guess what? That is it's just income replacement. So it's the same exact thing. Also, too, now it's different types of like business insurance depending upon like what you like. You got business insurance as far as like covering your business just in case somebody try to sue you, and you can have them. You go in that and utilize it to pay for like lawyer fees, attorney fees, and all of that stuff. Right. And you also, once again, you have the side, like I just explained with the key person, you got your business partner, and, you know, that right there alone will, of course, help the business thrive even more. Now, you got to be careful with that because, you know, a lot of people get whacked. If you watch the movies, I promise you, y'all, if y'all go watch these movies, like 85% of these movies, I got an ear for it, I always hear life insurance policies. Like, you know, with these.
That's Law and Order all day, every day.
You know what I'm saying? Oh, he got whacked. Oh, they killed him because of the insurance policy. Like, you got to be careful. So make sure you're getting in business with someone, going in business with someone that you trust, and get an insurance policy with your business partner whom you actually trust. You don't got to worry about them trying to set you up so they can get the money. You know, think about the Titanic, and that's all I'm gonna say.
So I like it was a tragic story, but it was oh my gosh, what was her name? Yeah. But she had a famous show. She was based in St. Louis, and she had a famous show, a cooking show on OWN. I don't know, and oh gosh, if y'all know the name, put it in the comments. But her husband took out a life insurance on her nephew or her grandchild, and had him killed to restore some type of money to the business or something like that. And he got caught for it. So I don't know if it was called Sweetie Pies. I'm looking that up now, that's bothering me. But
but I don't want to scare people with that now. Like that's what certain people do. All right, that's what certain people do. That's what certain people do. That's all I'm gonna say.
But you still want to cover yourself. Like the reason why a lot of these companies, I would say I've even heard like sororities and fraternities where they cover themselves financially through some type of insurance because they have the potential of getting lawsuits and how they just pay the money out because of this stuff they have covered and whatnot.
Yep.
So we mentioned before, and I wanted to go into that, IULs.
Yes.
Which stands for
Index Universal Life.
Okay.
Insurance. Yeah. Yes,
so let's talk about what is that, what are the advantages and disadvantages? Why would someone want an IUL?
Well, that's a great question. So the IUL is a special type of insurance policy. It has 3 components to it. Okay. The first component is it has a death benefit. And the reason why it has a death benefit, why? Because it's a life insurance policy, right? Second component is that the cash value, it collects compounding interest. Now, it's considered a whole life policy, but it's not a traditional whole life policy. It's like a hybrid, right? With a traditional whole life policy, your money is your cash value, is collecting interest, but an IUL is collecting compounding interest. And the compounding interest is what allows you to literally go in, borrow from yourself, and go create other assets and things. And this is what everybody is known to hear on social media: infinite banking or becoming your own bank. Now, there is a company out there. They despise this. They despise this product. They talk about it all the time. I'm not going to put them out on. I should put them out on blast, but I'm not like that. But they don't understand the importance of borrowing from an insurance policy compared to going to a bank. Why? Because you don't have to necessarily pay yourself back. And then if you borrow from a bank, it's going to affect your credit. Mm-hmm. They're going to be sending you mail pieces. Hey, Mr. Green, we need that $10,000 back plus interest. Mm-hmm. Compared to you like, hey, you got $10,000 that you're using, and it's not necessarily yours, because if you were to take that money out, you're actually taking out the insurance company's money. You utilize that, and your money is actually growing as if you didn't take $10,000 out. So that's the second part. So the first part is death benefit. Second part is the infinite banking or becoming your own bank with the cash value having compounding interest, and also it's tax free. You don't have to worry about Uncle Sam coming and getting a piece of that thing, right? And also, what I love about it, it mirrors what the market does. Okay, so people have their money in the regular markets, S&P 500. Their money goes like this. If the market tanks, guess what? They lose everything. But in an IUL, your money is going to do what the market is doing. However, if the market tanks, your money doesn't fall; it just plateaus. It stays right there. And then when you have times like the pandemic, or you got like pandemic, or in 08 with the real estate, with the what was it in 08? The recession. You can go in because now you can't go to work, especially with the pandemic. A lot of people lost money in their 401ks and all of these other investment accounts, right? But the IUL, if you got 100K in here, it's going to stay like this. And you can go and say it's a pandemic or the world shuts down again. You can go in, you can still live off of your insurance money. All right. And then when the market goes back up, whatever the market does, your money goes like this. So all you see is this, and this. You never see this and this. And then the third component to the IUL is the retirement part of it. You can actually structure it to where you can receive income when you retire. And now make sure when you do speak with an agent and you are, wanting to get one, I would rather you talk to me, because other agents, they're not going to do what they need to do, what they're supposed to do, because they're going to be commission hungry. They're going to worry more so about their pockets compared to your pockets. All right. But yeah, and also too, with the IUL, I will let this be known. It is not for everybody. So that's a disclaimer. This IUL thing is not for everybody. If you're not a person serious about wanting to have cash growth and use your cash value to do what you need to do to enhance your life, don't get one. If you're talking about $50 per month, $100 per month, and you're expecting a big return in a couple of years, no, this is not that at all. This is not that at all. Now, you can start off with that, but eventually you're going to, depending upon your age, once again, the older you are, the more you have to put into it so you can see a greater return. Does that make sense?
Yeah. So with the IUL, what ideally are you looking at putting in there a month?
That's a great question. So if you're 20 years young, if you're between 20, 25, $200 will look $200 per month will look good for you, right?
Okay,
And the reason
gotcha.
why, because you're younger. Now, if you're like 30, between 30 and 40, $500. Now, $50, you gotta probably do $1,000 so it can do what it do. All right.
Okay.
It's one of those things because a lot of people, well, I'm looking to get to have $20,000 within the next 3 years because I want to flip properties, but they're not willing to. I don't even want to use the word sacrifice, but actually do what you call a transfer of wealth. Going back to what you were saying as far as with buying sneakers and bags, right? You know, you've been contemplating with yourself. I need to stop buying shoes. I need to put my money into something else. Well, how about take that money and you just transfer that money into an IUL so it can get you that cash flow that you need. And now you could take $10,000 out of that 20,000 or that 30 or 40, however much you have in that cash value, and you go buy you a franchise. You go buy you a building, a sneaker store building, and have your own boutique. You go buy your own building for your restaurant or a boutique for to sell purses in. So now you are the bag, you are the shoe. People got to come to you compared to you just dishing it out, and then you're not getting anything on the back end. But with the IUL, this is what the IUL will allow you to do if you are willing and have the mindset and be disciplined enough to understand what this can do for you later down the road.
So, okay, just had an epiphany. So instead of you saving money per se, like putting money in a savings, I'm saving this because I want to put my business up one day. Would it make more sense to put it in an IUL?
Yes, I would highly recommend that. Yes, do it like that. Because you got to understand, this is what the rich and the wealthy do, y'all. This is what your bank, whoever you bank with, when you go and put your paycheck, when you get that paycheck, yes, you show it digitally, but they're taking that. Guess what they're putting their money into? This same product. That's how the banks make their money. That's why you have FDIC. Is your money is insured because the banks is putting your money in insurance companies. And then on top of that, once again, if you, for instance, you are an entrepreneur and you're out here and you want a building or whatever, you can opt into your insurance, your cash value, borrow from it, go create other money babies. Because there's a video out there, a lady explained it so well. She and her husband has an IUL policy. They use it to flip homes in real estate, put people and rip those bad boys out. They pay themselves back through the insurance policy, and then they rinse, wash, and repeat. They don't have to go to the bank.
That's what somebody was saying on the video. You don't have to go to the bank because you have this money here.
You have it here. And then the bank might take, well, we got to check this, we got to check that. And especially, I'm going to be real. Say you one of those people, you like cash is king, I don't care about credit. You need to get this then. Because you can't say cash is king. And if you want your money to grow, and I see a lot of people, they got the stack, bro, you had this $10,000, $20,000 stack to your ear for years. Why is you got to make it work for you? Put that bad boy in this IUL so it can double itself. You got $20,000, you made another $20,000 on it. Now you take that $20,000 that you made, go flip it, put it back and make it and triple, and that's all it is. That's why, and then also, like I said, with the IUL, when you do that, everything is tax-free. You don't have to pay taxes on borrowing from yourself because it's considered a loan. Now, when you pay taxes on your assets and what you pay, what you created and stuff from that income, yes, but that income would never probably surpass that money in that cash value. Even if it do, guess what? You still have your safety net over here. If all goes to crap over here, your business fails, guess what? Your IUL cash value is still at a significant amount to where you can still pull from and say, oh man, my business crashed. Well, at least I got my IUL money. I can still go in here, still pay my bills until I get back on my feet.
Now,
that's what the rich people do.
Okay, and I want to make sure we're clear. You borrow from the IUL, which means you're going to put that money back.
You don't have to necessarily put it back.
Break that down for me, because I'm one.
Yeah. So we say
down.
borrow because it's more so of a loan. So you're like you're borrowing from yourself.
Mm-hmm.
All right. So I got 10,000. So you can say, for instance, you got $20,000. You need 5,000.
Mm-hmm.
You're going to go in there. You're going to borrow 5,000. Right. And the reason why you say borrow 5,000 because you don't necessarily have to pay it back. But if you decide to pay it back, that's why you borrow from. Just think about it like this here. Everybody has done this. You have money in your checkings account and you got money in your savings account.
Mm-hmm.
What do you say to yourself? I'm gonna go ahead and I need money in my checkings. I'm gonna just borrow a little bit from my savings and move it over here, and I'm gonna just put it back.
Mm-hmm.
That's what that is.
Okay.
Did that make sense?
So how would you say you don't have to put it back? Why? Mm-hmm. So why wouldn't you?
Why wouldn't you?
Yeah, I want to make
because some people might not want to. You don't have because it's first and foremost you own it, right? Okay. So you don't have to. Now will you be penalized in a sense to where if you was not to pay it back? Yes, you would. That would just come out more so the death benefit. So that's why I say you don't have to pay it back at all because it's you're your own bank. Mm-hmm. You don't have to pay it back. Now I would say, hey, pay it back. Of course, because do good business for yourself, do good to yourself. Don't just not pay it back, but pay it back. So that way your money can accrue. And also too, with the IUL, you can overfund it. Mm-hmm. And you just rinse, wash, and repeat. Did that answer your question?
Yeah. So so let's say if I'm putting $500 towards my IUL, mm-hmm. then if in order for me to pay back what I borrowed, I could add a little bit more to that amount.
Right.
To cover it, to make sure.
But see, the thing is, when you take that out, it's going to be as if you didn't take anything out at all. Okay. You adding more to it is just going to be a catalyst to it growing faster at a greater rate. Because when you take, say, for instance, once again, you have $20,000 in there, and you take $5,000 out. Mm-hmm. Yeah, you got $5,000 out of it, but that $20,000 is still going to grow as if you didn't take $5,000 out.
Got you.
You know, and then now when you put the $5,000 back, it's just you doing a good deed, and then of course it's going to make sure it still grows at the rate. So when you do go back into it, you don't have to worry about anything being taken out of your death benefit. You know, because the insurance company say, well, you know, she did take $5,000 out, so we're going to have to take that $5,000 out of the death benefit. But you want to do good business to yourself. Mm-hmm. And what happens is, once again, you put that $5,000 back, and then you put extra into it. Well, it's just going to make that bad boy jump. It's mm-hmm. going to grow even better. And now you're like, oh man, I'm on the road. Okay. And then you start doing risk, wash, and repeat. And once again, don't go and do liabilities. Do assets. Buy assets with this. This is why you have your Grant Cardone.
Please break that down for people, because I don't think people understand an asset versus a liability. Mm-hmm. So when you say if you're going to borrow money from the IUL, make sure it's going towards the asset versus liability. Can you break that down for them, please?
An asset is something that will basically making you money. Right? Everybody know what a liability, you're not making money, you're just spending money. It's like depreciate. Like you buying a car off the lot, guess what? That's a liability. Unless you put it on Turo. Now it's become an asset for you. Does that make sense? Mm-hmm. If you go and buy a home, buying a house is a liability. People don't understand that. Yes, I'm a homeowner. Congratulations, but that's a liability unless you can utilize it for Airbnb, turn it into an Airbnb or whatever you got to do. Like that's the difference between an asset and a liability. An asset actually has it, you making money off of it. Mm-hmm. It's just layman terms.
Okay.
Yeah, but make sure with the IUL, you go, if it's vending machines, go invest in vending machines with you. I actually wrote a client up the other day. She's utilizing her IUL to expand her vending machine business. Mm. So now the money she's putting into right now in her own pocket, out of her own pocket, eventually will become, she will have, it'll become her vending machines will become an asset for her. Now she has it to where her vending machines will be paying for her IUL. And that's the difference. When you start having assets paying for your livelihood and your lifestyle,
you don't have to put the money in. Because I was just thinking, and I was wondering how that would work, but you just answered that question. I was just thinking, because you have some people, they step out on faith and they start out a business from nothing. But you have some people, they are trying to save up money while they're working their main job to put eventually a business. And what I just thought about just now, while I'm working my main job, I could be putting money in an IUL because I'm making enough, I can sustain an IUL. And then when I finally pull off that business and I'm making a substantial income from that business, I could be paying myself in my IUL, so I don't have to worry about money coming out of my pocket.
There you go. That's it.
So why do you think why don't we, again, if it wasn't for social, like a lot of people knock social media. If you were watching the right videos, like I was telling Carlderone at the beginning, before we even came on here, a stream of insurance, will and trust, and making sure your money is here, and making sure your LLC, having multiple LLCs and shell companies, all this started just coming through like floods on my timeline. So if you are cognizant about what you watch, that is exactly what you're going to be fed. So, but one thing, my question, Carlderone, is why don't we? I've never heard about an IUL with any insurance company I've been with. So why is that not something that people put out there?
Well, that's a great question. So everybody, brokers like myself, there are brokers putting information out there. However, with our community, we have what we call a "that's too good to be true" complex.
Okay.
Right. And I say that because there's I got family members I've tried to reach out to and telling them, hey, get this, you need to get this in place. But they put it off as if, and also to our people, we don't like to be told what to do. You know what I'm saying? And also, and I'm gonna be honest with you, being I look like my people, they're not gonna listen to me just yet. They'll listen to a counterpart before they listen to me. That's with anything. Like, so y'all can take, like, black people have it bad. A black man who is a professional broker could come to you and say, hey, listen, this is what you need to do. You may think of me as a client, but the counterpart may come through, he know what he's talking about.
Which we need to stop doing that.
You know what I'm saying? And that's what hurts our community, because you have a black man coming in, not only he's helping you, but you're helping him, because at the end of the day, I'm doing this. Yes, I love what I do, but I got to feed my family. But the money I make from here will help me to put the money back into the community. So that's why a lot of people, when they get successful, they come through a hood, they come through the hometown and everything like that. They're looking for we're like, hey, the hometown, like, listen, I'm here, like, be on that train with me. So help me get to this point so that way I can come back to y'all. But then what happens is the support is not there, or everybody, they try to leave you where they think you are at right now. He's 15, 20 years ago, and they're not noticing the growth and what you can actually help everybody do. They thinking you're just trying to con them, but no, help me get where I need to be. Not necessarily where I need to be, but help me get to a point so when I get there, guess what? I can come back and give to you all. And that's where the disconnect is at. And especially like this, black people don't want to spend money on, now I ain't gonna say black folks, because that's going to take away from people like yourself and people who I've helped, people who look like us. They have these policies, like they are, but those type of people, they have a certain mindset. And also I believe, like, and I'm not knocking my people as far as my hometown enough, but it's a small town complex. Everybody is comfortable where they are. I'm good. I don't need this. I got enough 401k. I got enough retirement. But hey, give me 15 to 20 minutes to have a conversation with you so I can educate you first, because you think that 401k is just enough, but it's not. You think that regular whole life insurance policy is okay, but it's not. Hey, here is an IUL. despite you putting money, despite you putting money into your 401k, how about this? Let's take that same $300 that you were putting in that 401k that you have to wait to get into when you're 59 years old, 60 years old. You could take that same $300 while you're young, put it into an IUL that can, and then when
I completely okay, yeah,
you need to access it. It won't be penalty. It's penalty free and it's tax free.
mm-hmm.
But people don't want to hear that because they want to keep up with the Joneses. They want to go buy whether it's Don Julio, they'll go party and all of that stuff. Talk about BS, talk about parlays and these prize picks. But you want money now, but you want money now, but in the same breath talking about you want wealth. Wealth takes time. Mm-hmm. Wealth takes discipline. Wealth takes mindset. So you can't have a right now mindset and then talking about, I want to be wealthy. No, the right now mindset you need to do is say, set myself up right now in the proper things that's going to take time for it to grow. Because if you make money fast, you lose it fast. Mm-hmm. But if you put it to, and also too, you're going out here chasing it. You don't have to chase it when you put it in vehicles like this because it's going to make itself. Mm-hmm. So set yourself up for success, not failure. And then you're going to be the one point. Donald Trump, bro, there's a lot of people I see on Facebook complaining about who's in office and y'all been in the same position for 20 years.
Before he got in office.
40 years, 50 years, ain't changed a bit. Mindset ain't changed, but you blaming who's in the office. The victim mentality, African American, Black people, my people, that SH sugar honey iced tea got to go. Mm-hmm. Yeah, we have to start putting our money into things that's going to benefit us in the long run. And as we have to be the trailblazers. We might not be able to enjoy it right now, but our kids could be able to enjoy it. Their kids could be able to enjoy it. You don't have to, because if you have your own money and stuff, you don't have to depend on what Trump or anybody in the office is going to do for you.
I thought about something real quick with the IUL. Mm-hmm. Could you technically have a family IUL? Yes. Where all of us invest into this? Because so you may not have the $200 to put in for a month. So maybe we could put together and put $50 a month in one policy and we can borrow and put it towards assets.
There you go. See, pick the healthiest person. Pick the healthiest.
That's what someone was saying. Yeah.
Get everybody do $50, $100 per. The youngest and the youngest and the healthiest. Put all of that money together. Put it on that person. So now, when the cash value grows, right, is y'all can opt into it when you need be. Now, make sure you do it once again. Make sure you have family members that understand the dynamic, because then you may have those family members. But I need this right now. I put in this too. This mine too. Hey, this is for everybody. Mm-hmm. Nobody's not going to touch this thing until year 5, where we have X amount of dollars. Then we're going to only take a little bit. Don't take the whole thing out. Mm-hmm. That's the thing people mess up on. Don't take everything out. Take a little bit of it out. Go create a family business or family assets of some sort, or do like that family do. Hey, this go around, we're going to focus on you. Get you going. Then the next go around, when we go and get another 10K, we're going to focus on your franchise or your business idea. Mm-hmm. Do it like that. But you got to make sure you get around family, your neighborhood. Everybody they got to have that mindset. Sometimes you got to step out of that. Sometimes you got to go see some strangers. Like for instance, I guarantee you, I have with my mentor, I don't even like telling people this, but his brother is one of the big time guys in the NBA, right? He's my mentor. The way he thinks, and I implement that in how I move, I try to pass it off to people I know. It's hard to do. So sometimes you got to go off and meet strangers. And also too, with your hometown, they got to see you be successful. I don't know what that is about. They got to see you make it. And then they'll say, okay, I'm going to follow suit. But it's like, okay, cool. If Harriet tell me where to come, I'm telling you, we need to go right now. No, I'm going to wait and see if y'all make it first. You can't be mad if, you get caught, because you should have came on when I told you to come. Now, when you wait for me, to get where I want to get where I'm at or at this particular level, you're still that's going to take a little longer for you to get that IUL growth or this annuity to grow or whatever like that, whatever it may be.
So my last question, and before we go, and I think I want to make sure I'm communicating this right. Mm-hmm. So let's say you are putting the $200 with the $500 in a month for the IUL. Mm-hmm. You should not expect to borrow immediately. It's going to take at least a year to build that money up.
Yeah.
Okay.
It depends, and like I said, patience is key with this thing. It's not one of those things, and don't expect the $200 is going to get you like have you $10,000 in the second year. No, it's not. You got to do more. And like I said, the older you are, the more you got to put in. The younger you are, you don't have to put in as much. But I go back to this. Look at your budget. Look at the things that you don't need, mm-hmm. right? Also, the things that you are spending money on. You say, you know what? I'm going to do a hard transfer of wealth instead of me putting it over here in my savings account. Mm-hmm. I'm going to put it into an IUL. Mm-hmm. The savings account, okay, cool, that's fine and all. But if you've been putting $500 in your savings account per month, stop doing that. Put it into something.
Not making any money at all.
Right. Because if you have it in your savings account, I mean, you don't have a death benefit associated with your, So
this is crazy. This is crazy. I don't know. We're going to have a part 3. But I definitely wouldn't mind talking more about, like, as I'm watching the videos, if I see more, I will definitely chime in and text you and contact you and see if there's something we can have a discussion. Because when I say it's a wealth of knowledge out there, y'all, that we really need to have conversations. I was sharing with Carlderone before we got started how my pastor, he's bringing in someone. He's already been talking to us about money. Matter of fact, January is actually, I'm doing our Bible study, is focus on money. Mm-hmm. And he talks about life insurance. He talks about how you shouldn't be buying a car for a 17-month lease.
Yes.
And he was, and so we talk about stuff like that at Right Direction Church International on Broad River Road. Look us up. So we talk about things like that. So he actually brought in someone. It's called Motorzone or something like that. But one of the things we're talking about is having a will versus a trust. Mm-hmm. How do we put those things together? How can we benefit tax-wise? Like, a lot of us don't realize we don't have to pay out all these taxes if we knew how to work the systems the right way. So when it was another session too that they talked about, and you had to sign up for it, but we need more churches to come together. Another thing that I did, and I have to make sure eventually I'm gonna do a replay of certain episodes and play things here. But even my last episode I did it last season was 2 teachers who they created their own financial literacy course with their middle school students. So I was watching the interview they did with his student, and his student said, the reality is money is tied to emotion. And once you realize you're getting this, not because you need it, but because you want it, you realize you don't need to spend that money. Yep. And I was just like, and the fact they're getting that at 11, 12, and 13, imagine what's going to happen to them exponentially financially if they had that mindset versus, like, I remember hearing a family member saying one time, money is for you to spend it. I was like, oh, no.
Money does not exist. Money does not exist. It's a tool. Money is a tool. It's not for you to spend it. It's a tool for you to utilize to of course, buy your time. Mm-hmm. Y'all, I'm gonna tell y'all somebody. Look, if y'all don't look at anybody else, I want y'all to look up this guy named Myron Golden. Mm-hmm. Myron Golden. I listen to this guy faithfully. He's like one of my virtual mentors. He's a pastor, but what he does, he breaks down everything you're talking about, and he uses the Bible, and breaks down how the principles of running a business and your money and all of that stuff, and using the Bible to compare it and all that stuff. Like it'll blow your mind. It'll blow your mind. Look up Myron Golden. He's going to tell you the same thing. Money is. That's why I dealt with it too. I'm like, man, I can't. I want to do this, and I know I need to do this. I need to have this in place because what you get right now may not suffice for you 5 years down the road. And that's why I think a lot of people are not understanding we're so much of a instant gratification generation.
Yeah.
You know, we say, where you see yourself in 5 years? Well, I see myself with my dream home and my dream car, but you're not being that person right now, because that person that you want to be, guess what? You're going to have more money. You're going to have more problems. So become that problem now with less than managing what you have now. So 5 years from now, guess what? That empire has grown. That seed is planted today, not 5 years later. Because then 5 years come, the next 5 years, you're still in the same position. Well, what's your 5-year plan again? I'm still on my journey to get my dream house and my dream car. And it's the same thing, but you got to start right now. There's nothing wrong with starting right now.
So, and while you were saying that, I was thinking about somebody else that I follow. He was actually, I heard he has roots here, but he was here the other day. Anthony O'Neill.
Ayo, that's my guy too. I get emails from this guy all the time.
And it's simple. And a lot of people don't realize, people think you have to come up with some awesome, dope idea to make all this money. No, it could be something simple and it's doing practical things. Like, they were talking about how Keke Palmer, she has a Toyota. Like, she has learned, I'm making millions of dollars, but I don't have to spend like that. So it's like Anthony O'Neill's another one. Another young lady, I catch her here and there, and I need to buy her book, but she calls herself the Budgetnista. Let me make sure I'm telling y'all exactly.
I know exactly who's a budgetnista is too.
Yeah, so she's called the Budgetnista, and she has several books out there, workbooks and whatnot. If your church has what is called a D-free course, I would strongly recommend, and we're talking more like financial stability right now, but when it comes to life insurance, we need to have these conversations with our people, with our family members, with your friends, people you're close to make sure that people are secure, that they have something to cover them. And it's nothing wrong with checking your friend on, okay, you got how many Jordans this past year? That's a whole that's an IUL by itself. But again, I like how you said, though, don't get this if you're not going to invest it in some type of asset that's going to help you make money. Right. If you're just trying to borrow money because you're trying to, Mexico it up, then this is not what you're just trying to take trips and stuff. You know what I'm saying? Yep. Nah, but this is something this is something I wish I had known, because I would have been more cognizant in investing in this before I launched out into my business. I mean, it's working out for me now, but I was just sharing with him earlier how, even though I really don't want to put my business out there, I don't mind. I had to pull for my retirement. Like, I am basically living off my retirement until things get started. I was taxed for that. Versus if I had an IUL, I didn't have to pay taxes on top of taxes. And it ain't no cheap taxes. Like, someone even told me, well, Ryan, you could pay this amount, but I'm going to tell you now, they're going to tell you need to pay more when taxes come around in April. I was like, no. I'm believing God for things to work out for the sense that I'm realizing too is a lot of business expenses I have from my home was now being deemed a home business. So there's things I can write off of my taxes that can balance that out. But it's very important for us to get connected with people who give us the information. I'm going to put up his information again if you want to follow him. But also even with his videos, he's very informational and gives you things that can help you get grounded. If you want to contact his company, it's crgwealthgroup.com. He can get you connected to where you need to go as far as life insurance is concerned. If you need IULs, he can help you with that. But please, 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 this will be up on Facebook and Instagram for the next 24 hours. Then after that, I will take it down, but it will be on YouTube forever. And it will also be on Spotify. Play this with your family members. Play this with your friends. Talk about it and come together and have a strategy. Now, let's be real. If Pookie and them ain't trying to put no money in it, then they just got to be out. And then when something happened to Pookie's mama and they want somebody to cover the funeral, but you could have put your money in this and you didn't want to. So guess what? You have to figure it out. Yep. So we got to have hard conversations like that. Like I'll never forget when a family member came to my mom, like, if we want you to help do this with the funeral. My mom was like, no, no, like y'all should have made sure this stuff was taken care of. That's not our jobs. Just because I'm family, I shouldn't have to pay for this. And the reality is, I like also another takeaway that I got from this. If I really wanted to, I could take out a policy on my son because he is the healthiest. He is the youngest. So his policy will be a whole lot cheaper. And that way, invest so much money into that, and we can invest it in a business he wants or some type of asset that will produce money and help us get to where we need to be financially. So just think about these things. And I think I kind of already said this before. Again, another takeaway: instead of you putting together $500 a month towards savings because you're trying to put up a business or you're put it in an IUL. So IULs, people, get on it. So I greatly appreciate Carlderone. Y'all see his information here. Please contact him if you have any questions. Our next episode, I'm gonna take you off stage, Carlderone, but don't go anywhere.
Okay.
So our next episode is actually this week. Normally, I do not do 2 episodes in 1 week, but I'm one of those podcasters that if my guests only can come on at a certain day, that's when they're going to come on. So our next episode, I'm so excited about this episode. This is Paula Chase. She's an author. I have read, I think, at least 5 of her books. She donated towards my All Black Author Book Drive, a whole lot of books. So we're going to talk about her books, her career, her being a published author. She said she's going to reveal some goodies to us, which is truly awesome. So that's going to be this Thursday at 7:00. And then our next episode will be the following Thursday, will be with Troy Spire. I actually went to college with Troy at Winthrop. And if you have not already seen him on social media, you will see that he talks about relationships. So we're going to talk about dating in 2025. I'm not going to sit here and lie, trying to get myself out there myself. We'll see what happens with that. But we're going to talk about dating in 2025. So that's going to be next Thursday. A few reminders. Again, Blessing for the World is available, y'all. Y'all can go on any of those websites, my websites, and get it. It will take 1 to 2 weeks to get to you. I'll admit I need to put in an order today for those of you who ordered last week, even though I feel like I have enough of the last order I made to get you a book, but I'm going to make sure I have enough. Again, you can access all of the Crown by Nichelle podcasts on Apple Podcasts, Amazon, iHeart, even YouTube. You can watch the video. So I truly appreciate y'all coming on tonight, and tell a friend to tune in, and thank y'all so much for coming. Y'all have a good night.